The way I'd describe today was simply market sideways, at least the S&P and the Nasdaq, whereas the weaker markets, let's say the Dow Jones, in particular the Russell 2000, down. The Dow Jones not as much as the Russell, but the Russell was down 1%, and the banks were also down. And you know what? Although the S&P and the Nasdaq, the S&P being a little stronger, taken over from the Nasdaq. At least, I mean, they were sort of sideways, flagging, still looking for a pop. You can see the S&P here, just holding, basically flat. Wants to test 450. Let's see. It's got this little gap that's dying to be closed, by the way, but not weak. Certainly not weak, and still in the lead. The Nasdaq similar, just touch this resistance. You can tell there's resistance. Same with the S&P. But yeah, not as strong for once, the Nasdaq. The Dow Jones, you can see, come off, never even tested this high. This isn't the straightest line, but you get my point. So Dow Jones already, you can tell, isn't as strong. And you know what? Hasn't rallied too much compared to the other two. The Russell, though, look at that. Down 1%, nowhere near its highs, not flagging like the S&P or the Nasdaq, already showing what may happen to the Nasdaq and the S&P maybe. And if we look at the banking stocks, okay, I mean, this is a similar sort of pattern, but nowhere near as high. The XLF is the seniors. But if you look at the KBE and the KRE, and you know what, I've been saying the same thing for months. It's really about the banks and interest rates. Those are the two, I wouldn't even call it assets, the bank, the regional banks, you could call that a sector, let's say, but interest rates, also a sector. Those two sectors are the most important, I reckon. They lead everything. They paint the bigger picture. Obviously, the Fed is unbelievably important too, but okay, those three elements. But look at the KB and the KRE. Does that look strong? Does that look like it's flagging all the way up there? No. In fact, that looks like it's ready to fall over. KRE, exactly the same thing, maybe even a bit weaker. That takes what, 2 trading days? One red day tomorrow, down 2%, 2.3% or something. And the next day we close below this. And then we're looking like we're flushing. I mean, I've been saying it for a long time, but you know what? It's going to happen. It's just going to happen. The banks are going to flush. Interest rates are going up. What happened? We're going to get interest rates literally in 3 minutes. But last time interest rates went up, this is what happened. The banks just, people unearthed what was always there, which is a horrible balance sheet, massive losses, and rates just completely plummeting all these, all this debt they were holding. So for me, interest rates in the banks could paint the picture for what might come. The Nasdaq and the S&P have just done amazingly. It's unfathomable almost how high they've rallied, unless you look at the European markets, for example, that have already rallied all the way to their old highs and in some cases taken them out. But I think I mean, this has surprised me. It can go higher. I can see where the levels are: 450, 460, 470 something, 72, 72.5, and then 480. 10 unit increments, pretty much. Not hard to tell. And you got to respect the move up, and you've got to tell when it's going to retrace and then go back up. So, the levels work both ways. So the technicals always help. But despite that, you've got to also take into account the fundamental picture. And for me, the fundamental picture is, yes, we have a lot of inflation, which may also explain the move up, not just in US markets, but the others. But at the same time, we have a very, very weak economy. We have rates going up that basically it's like the tide going out. You'll find out who's swimming naked. So for me, the Russell is the first sign, will be and has been so far the first market to really be exposed for the weakness that it is. And this is the real small caps, small business America. Then you've got the banks that are, everyone used to think that they're untouchable, everyone's JP Morgan. No, we've seen some go under, and we're seeing rates go back up to where it was when it triggered everything go under. So I say that to say this: the Russell, weak. The KBE and the KRE, weak. Watch the flush. I think it's coming. I think it's coming. The rates. Let's check rates. 1 year. A bit special because it didn't actually go up today. Everything's reset. But, it's a bit of a red day, but it doesn't matter. The 1 year basic just goes up. Staircase up. It has little moments where it just comes back down a little bit. Maybe it wants to retest 5.3 and then it'll bounce and then go back up. It may even destroy this ascending support just to mess with me and people who watch this. But generally, you know what's happening. It's going to go back down and it's going to go back up to new highs. The 1 year is a bit special. It can just be red when everything else is green, but basically it's green every day, right? If you zoom out, the 2 year, same thing. Look at this beautiful. Look at that. Look at that descending breakout. It has just not stopped going up since then. Just have these 3 days red and then just marches up. What's it going to do? It's going to go and test 5%. Then it's going to close above 5%. Then it's going to test 5.10. Then it's going to close above 5 point, and then it's all going to come crashing down as the banks collapse. That's what I think is going to happen. The 5 year marching up. Today was a big day. You can't tell anymore the percentage move, but it was, 1-2% or something, closing just at the descending. Very important, right? We're above 4%. Look at that, 4.2, 4% now, above 4.2%. So the 5%, the 5 year, just below the descending, the 10-year yield. Look at this breakout of its own descending. What's it going to do? It's going to go test 4%. Then it's going to go sideways, and then 1 or 2 days later, it's going to go test 4.1. The 30-year, look at that. Definitely the weakest one. Whilst everything was going up, this is even going down. But now, no, we're forced to go up. Everyone's going up. What's it going to do? It's going to go test 4%, then it's going to go close above it, and then it's going to start into this zone. If you think that the stock market is just going to keep marching up, with everyone saying AI, and they're thinking, I didn't mention this, but the only other excuse other than inflation is the belief that AI will provide a miracle productivity miracle, let's say. So, and theoretically it could happen. You could just have a bunch of machines just create, print. I also am a big fan of 3D printing. You could 3D print stuff instead of depending on China. Obviously, it takes energy, but that would actually work. But again, capitalism would solve the problems government has created, but still government is too big. It's just too much in the way, and it's an unmovable object almost. So I still don't think that AI will make up for the debt, the spending, and just the fundamental problems that the economy has. Anyway, interest rates up, and it's not just the US. Look at that. Knew it. All the way back up. The EU, trust me, when the 2 year, the 5 year, when they will start to breach, when the 10 year gets to 4% and starts to rise above, when the 30 year hits 4%, this EU 10 year will start to also be trading in the 2.6 zone and also testing and ultimately, eventually, making new highs. Same with the GB. Look at that. That's 1 or 2 days away. Something is going to crash. And I don't think the stock market will be green that day or for several days. So yeah, you got to respect the S&P and the Nasdaq going up, but the interest rates and the banks, that is a huge warning sign. Good luck buying Nvidia up here. I added to my short, by the way. Okay, that's interesting. Let's look at the dollar. The dollar, which has been going up with interest rates. Very nice. 103.4, let's say. What do I think is going to happen? We're going to go to 104. We may even go to 104.5. We'll hover a little bit, come down a tiny bit, and we're going to break out. The dollar, I think, will get to this zone, take 1 or 2 days respite, and then break out with interest rates. And if the stock market crashes because something is breaking, a bank is going bankrupt, which I actually think will happen. Which way does the dollar go? Well, last time it went down. This time, not so sure. Not so sure. And usually you'd expect the dollar to go up, right? It's a fair trade. Everyone sells stocks, goes into cash. Cash is king. I think the dollar will do what it should have done and what it did not do last time, which is go up. So bias to the upside. Gold, by the way, we're going to get to gold soon, but gold will probably also go up if there's a stock market crash based on banking crash, based on interest rates going up. But otherwise, if the dollar's just going up, gold should take a hit. But I actually think both will go up if it's a fair trade. Okay, let's check out commodities. Copper just sideways. Market wasn't green, and the dollar was up. So it makes sense that it's down. It's not down by too much, but markets weren't down by too much, and the dollar wasn't up too much. So it kind of makes sense. Still keeping within the ascending. Natural gas I have no worry about this. This should go up. It doesn't even matter what the market does, to be honest, or even the dollar. This should just be operating by itself. I actually would have expected this to be a bit green today, but there you go. Close near low of day. To me, it's just more sideways action until a breakout. I don't see it going back down. I don't see it going back down. Obviously, it can, but I don't think this rally was just to move up here to go back down. So, natural gas, small disappointment, but nothing serious. Oil, look at that, breaking out of the descending. And remember what happened when I had other descendings like this, huh? Breakout, kept going. Now, oil is nowhere near the same thing as interest rates, different elements making up the supply demand and all that stuff, but still, oil has been very resilient down here in the low 60s, sorry, the low 67s. What doesn't go down must go up. So you know what? And I said in the last video, I reckon, well, yeah, I reckon we break out this descending. I think we're going to test 74, sideways, whatever, boom. Let's go test 80. You know, wanted to push it down. No, no, no. Okay, fine. You deserve to go up. Let's go test if you're strong up here. And then it'll probably come back down, whatever. We'll see. Let's see what the supply demand. Also, there was a bit of a extra supply cuts decision by OPEC, so that probably helped too. But those haven't been helping too much. Hasn't really been able to clear 74. So let's see. We're going to go visit 74. I can say that. Uranium, red. It was actually quite a red day for the uranium stocks to URNM. Some individual stocks got pretty slammed, but this is nothing crazy. It's just more testing of the breakout, you know, the descending breakout. So not bearish. It's not unbelievably bullish, but well, actually, you zoom out. This is still a bullish chart, right? We broke out this long-term strategic downtrend. We're just retesting it. Now it's just going to go sideways, grind sideways, and go up. That's what it should do. If it goes back into this triangle, which the stocks have done, by the way, if you look at URNM, don't get lost here, but you can see that the breakout wasn't as strong, but you know, you can cut it some slack. But yeah, it was just a sideways day. I would still classify this as a sideways day for uranium. What you wouldn't want to see though is for it to start closing below 21. Then that would indicate we want to go back, you know, to 20, probably. Probably. Yeah, probably. But long term, I like uranium. All right, gold. Not the best day. First of all, silver was up pretty strong. Gold wasn't. It happens. It shouldn't happen, but you know, pretty clear divergence there. Closing low of day rejected the 1940 level. You can see the horizontal line. It's just below. So it just rejected it again. You know, dollar was up, interest rates were up. The market was just sideways, so that wouldn't really help either way. So let's see, let's see if we put in the low just below 1900 flush. Maybe we go back down, we test 1900. We probably would rally just above 1900 if we start to flush 1900, which would probably coincide with the dollar going to 104, the DXY. So let's see how gold reacts with the dollar going up. The dollar should go to 104, 104.5. By then, you should be at your lows because we haven't been that high in the dollar. So actually, if we go to 104, 104.5, it should be lower than here, but I don't think it will be. I think the rally has been stronger and it's been going up with the dollar. So I actually think the dollar will find resistance at 104, 104.5 with gold pretty much still in the 1900s. And then you're looking for a double bottom and then move back up to 1940. You know what I mean? You're looking for one of those. Okay, the DXY is at 104.5. Okay, cool. Now we're going to bounce as the dollar retraces and goes back down. But again, I think the dollar will break out. So we have to see what happens with gold and why the dollar is going up. Is the market breaking down? Are the banks breaking down? A lot of things will coalesce very soon, not just technically, but I think fundamentally. So you've got to look at all those, points to the picture. Silver outperformed gold, very nice. Popped its head above support. This is probably the equivalent of gold at 1940, actually. But that doesn't really matter. So let's see. If gold goes down with the dollar going up, we will of course go down in silver. I don't care how strong you are. This is not the strongest day. And then we'll see if we hold, let's say 22.4-ish, do we rally just above? Do we start to have more trend lines? If I take up a 15-minute chart, what other trend lines could we see? Maybe something like this if we start to flush. If the DXY is going up and sending gold down, can we hold this? We probably have to zoom in a bit more to see some mini trend lines. But still, overall for now, today silver was strong, and I think I'd probably be watching gold more if things start to crumble rather than silver to see when we may reverse. For me, silver, if we do start to flush, I'd be looking at prior low here, of course, just above 22. But really, it's this ascending, which I have to move forward now because time element is coming in. So if we do start to flush, and I don't see us just going down so fast, but if we do now, 21.5 would be support. So yeah. All right, GDX, look at that. Close at low of day, massive bearish engulfing. It's as if, this is underperforming gold and definitely silver. And okay, the markets were red, but not that much. So I think the GDXJ is just underperformed everything today. This is a little over the top. 3% minus 2.8, 3% is not completely crazy, but still, when silver was green, that should have helped GDXJ. Gold was not down that much. The market wasn't down that much. Dollar wasn't up too much. So I think this is a bit of an exaggeration, but it proves that people were really quick to dump the miners. Again, they just don't believe in the gold rally. Rates are going up. People believe that rates are going up, and how can gold do well? I think it does. Historically, it does actually do well, but I just don't think the faith is there in the miners. Maybe in gold and silver a bit more, but the miners, those are the hardcore believers, and I don't think you have institutional speculators in the miners. And a day like today kind of signals that. But who cares about that? Well, technically, I think the absolute low down here should hold unless we start to flush 1900 in gold. Keep it simple, GDXJ, exact same thing. It's all about gold holding 1900 as the dollar rises. That's all I'm going to say. Maybe in one or two videos, I may completely clear the technicals because we may have to redraw some. This one, for example, can go now because we've already gone through that here. Yeah, something I'll do maybe over the weekend. But for me, it's it's the same sectors that you got to watch, and I'm ending it here. It's the banks and the Russell 2000, they go together. It's interest rates and the dollar. The dollar if you're trading commodities, but really, if I had to choose, it's really the banks and interest rates. Russell, banks, interest rates. And then if you're doing commodities or gold, silver, and the miners. So at least it's getting easier in that respect. You have fewer charts to look at. But in particular, I am checking interest rates number one and banks number two, etc., etc. All right, I hope that was useful. Good luck. I think it's going to get pretty wild very soon. So pay attention now. Good luck.